Good afternoon, everyone. It's Scribe Lambert here from FuturesTechs. We promised we'd do these regular video updates, and then life got very busy, markets got very tough. I think it was the Fed shutdown, not the Fed, the US government shutdown thing. I think personally it's made it very difficult to chart the markets and to get trades on that can stick. Apart from with the odd exception, I think the bond markets have been reasonably well behaved. In fact, they're doing nothing, especially stateside, in the last few weeks. Equity markets have behaved well. I was looking at things today, and we've been bearish with the Dow futures since the 25th of September, and have ridden a pretty decent move lower in that one during that time. Gold is still messing around a little bit, but is looking like it's going to resolve that to the downside. We're going to have another look at the recent lows. So let's look at some charts, and it's equity markets where I think we probably should be concentrating our attentions for now. And we've actually got something that I put out to clients this morning about on the FTSE index. And here's the chart behind me. We've got the high from August up here, and then the high from September, mid-September up here, and this is the futures continuation chart. And they're both at more or less the same levels, which is actually the 78.6% retrace of the drop from 22nd of May to 25th of June. I'm not a big fan of these 78.6 retraces. I think the Ellioticians like them and use them. For me, they're a reference level, but by the time something's got back 78% of its move, arguably it's not retracing anymore. But in this occasion did do a lovely job, and now we dropped below. This happened yesterday. We dropped below this low between the two highs, 6346.5 on the futures. Retested it this morning, and on the first test failed, and that's something that's significant for me, although we're still yet to really move away from that. I guess, I'm recording this with 3 minutes to go before the US markets kick off, so the first hour or so always interesting in S&P, Dow, and NASDAQ, and the market stateside. What happens in the first half an hour to an hour? So let's look at those markets. S&P yesterday broke trend support line. That line is at 1670 for S&P futures, and we've broken it. Significant. Very clearly. This morning, this overnight high has been 1658.75, which is failing to retake the Marabuzzo resistance at that same level. Plus the 3rd of October low, 1663. That was a support level yesterday. It's a resistance level now. Let's keep an eye on what happens with that one. The Dow. The Dow. I don't think I've got the Dow on here. That's looking pretty nasty. Let's just bring the chart up, shall we? Dow has broken, and we'll just throw some horizontal lines on this chart. The Dow has broken the 28th of August low, 14,740. Remember, we're looking at futures continuation charts here. And now can target the 24th of June low there at 14,474. But for me, if you go to something like a weekly, this looks to me like a major distribution type of thing going on here. There's candlesticks to, that's a weekly chart. There we have a shooting star confirmed with an engulfing pattern. This kind of triple top type thing. This is what we see at tops. Choppy. No, we'll see. And the only thing US wise that was kind of getting you scratching your head, that's exactly what I've just done, was the NASDAQ. Now I'm hoping this NASDAQ chart will build, which was trading beautifully higher, ignoring anything, any woes, any worries, right up until the last few days, and actually yesterday broke the trend line, broke the 30th of September low, traded right back to 31.48, which is a big level. Now 31.48 is, there's a high there in August, it's the high twice in August, 13th and 26th, and then failed again 6th September, broke 9th September, broke higher, back to there now. It's a big level. Let's be under no illusions. What happens right around here at 1348 in the NASDAQ is going to shape the future of that index. Personally, I think the risk is to the downside on these indices, although people who know me very well might say I've got a generally bearish bias. I hope not. I do try my best to be completely subjective, and the charts are saying to me right now there's downside risk, and that would be my biggest worry. So thanks very much for listening. If you're an existing client, thanks. Always give us a shout if you've got any questions. If you're looking at this for the first time, then we write analysis every day on bond futures, equity futures, foreign exchange and commodity futures, and happy to give you a free trial, so please contact us if that's something you're interested in. Thanks very much. Have a good day.